Okay, guys, good morning to you once again. This is Cal on live right now. Let's go live indeed. Okay, let's begin. Now, guys, this is going to be a very interesting session, especially going to cover on the US dollar. So kindly now share with many people, your friends, let them know that today will be a very interesting session. All right, do that now. Okay, share with your friends. Share with all your friends around you and tell them today, okay, this guy is going to talk about this US dollar later and what is the impact of the US dollar. And of course, I'll cover a little bit on some of the US stocks, okay? So please, guys, get your friends into this Facebook group right now. All right, this Facebook page. Contact them, tell them, say, okay, this guy is sharing some interesting stuff. Come on in, okay? All right, I give you 30 seconds to do that. Just click share to whoever you think that will benefit from this, okay? All right, we're going to start our session very, very soon, okay? Okay, all right. Now, good morning to all of you once again. Today is the 27th of December. Okay, all right. Now, good morning to all of you once again. Okay, this is the 27th of December. And many people have been asking me, Cal, would there be an MAO this morning? I said that there will be, as I promise you, unless due to market that's closed. If not every day, I'll make a point to get myself ready. Now, of course, this morning the content won't be a lot because of the holiday, but I still managed to dig out some very good stuff for you, and we really want you to get some benefit of it because you probably don't see this in the mainstream media. Yeah, you won't see this in the mainstream media. So guys, get your friends in right now and do this, okay? I'm going to go live and be talking in very short moment time, okay? All right. Once again, good morning to all of you, okay? Okay, all right. Let's just begin. Good morning to you, Alex, Louis, Eric, Janet, and Edwin. All right, good morning to all of you. Let's go with our morning MAO. All right. Now, morning MAO has now received a lot of traction from people. Many people came to me and said, Cal, good job for your MAO. You are really putting yourself into the picture. I say, yes, indeed, because I really think that this is a good time to share with a lot of my friends. All right, so today is the 27th of December, Monday. All right, we are just 4 days away from the brand new year. Are we ready to start the Santa Claus rally? Now, Santa Claus rally actually is supposed to start from today onwards, okay? It's not before Christmas, actually, it's after Christmas. It's today, tomorrow, and this whole week, and then the next two first trading days, okay? So what we have at the background, obviously, is all the celebration. People are happy, Christmas, I'm sure. But of course, unfortunately, there are some unfortunate events happening around Christmas period that dampen the mood a little bit. But I say again, we have to pray for everybody for good health and good, what they call peace. All right, this is something that we have to do. All right, so we'll start off with the disclaimer as usual. Okay, as usual, we'll do that. Do share with your friends today's session. It's going to be very interesting. We're going to cover about US dollar. It's something that you all don't really take note because actually this one, it moves so slowly that people don't really bother. But if you look at it carefully, you'll see a lot of gems inside it. All right. Now, of course, this is the Wall Street joke of the day. And of course, with the electricity pumping up the system. Okay. Now, what is the electricity that's pumping up the system? Obviously, it's of money. All right. Federal Reserve have been pumping in $5.5 trillion over the last 10 years. And of course, in fact, the last 2 years, okay, since 2020 during the COVID-19, they pump in as much as $4 trillion into the system. So as long as the electricity, aka money, is in the market, there's no way to stop this bull. I already tell you that. But of course, we all know that tapering is ongoing right now, which means there's reduction. And of course, when you reduce the dollar, now this is going to become a big problem because the dollar is the one that's motivating the stock market. And if let's say now we have the dollar not coming in, then naturally, okay, the stock market may have to ask a question, can we continue? Number two, now if the tapering is actually coming in and there's a reduction of the dollar in the market, so the question is the dollar will likely rise. Yes, indeed. So a higher dollar, what would it bring to the equity market? Will a higher dollar bring the stock market higher or bring the stock market lower? So let me ask everybody right now, there are about 30 of you right here. Can you tell me, a stronger dollar will bring the equity market higher or lower? Please key your answer right now so that we all can actually, see whether do we share the same thing. Let me have your answer, guys. What do you think? A stronger dollar will bring the equity market higher or lower? Let me know your answer right now. Okay, we have some answers already coming in. Okay, some of you say it's lower by Louis. Eric say lower by this, lower also by Liu. All right, so it seems like, right, everybody is actually expecting a lower equity market when the dollar strengthened. Now the thing is this, actually in the likes of this, right, by fundamental, a country currency is equivalent. I mean, the strength of the currency is equivalent to stock market equivalent. Now, fundamental, yeah. So that's why a stronger Sing dollar usually will still bring up the STI higher, because that gives confidence to the investors inside there. But of course, right, for Japan is different. Japan want a weaker yen, so that's why the weaker yen will usually bring the Nikkei higher. So the question is this, US, what do you think? Now, I already see some of the answers already. We will talk about this, and this will probably give us a bit of heads up regarding about what will happen in the next 6 months in the market, okay? Pretty cool, yeah? Okay, excuse me. Okay, so the thing is this, for this coming week, we have the consumer confidence is coming Tuesday, tomorrow. And there's no forecast, not too sure why is that so. Okay, at the morning, and I do a screenshot of this, so I just wait for a while. But Wednesday, we have the pending home sales, okay? And Thursday, we have the initial jobless claims, all right? So that's the weekly data. So we'll come back to this tomorrow, but do note it's a short week. And of course, the data in jobless claim and consumer confidence, these two will be the main driver for this week. Now, in Singapore, for local and global news, okay, Omicron cases can recover at home community care facility from 27 December. Now, basically in Singapore, there's 546 confirmed Omicron cases. That's quite a bit, right? But the thing is this, there's only 443 imported cases and 103 local ones. Okay, so you can see that we did have a little bit of spreading inside the community, but it's still a very small, low number. Okay, so in the past week itself, 13 unlinked community cases, and of course now they are okay because none of them need this intensive care or oxygen supplementation. So that means that overall still within control. Yeah, I've been telling y'all this. I just got this feeling that Omicron could be the one that's going to take away COVID-19. I just got this damn feeling itself. So I don't know whether is this the right way to think, but I just got this feeling. And of course now with that, right, people can stay at home because it's not that really dangerous. So people are able to stay at home. They only have some of the symptoms like sore throat and fever and a bit of running nose, but they are okay in general. So this is what happened in Singapore. Now, but Dr. Fauci from US says that the COVID cases will go much higher as Omicron spreads continues once again getting complacent. So every day is going up. Apparently last week itself, right, US cases, 150,000 cases just on COVID cases, sorry. And of course, in total now in US have 51 million cases. That's about probably 1/5 of the entire population, 1/5 to 1/6, okay? And of course, the total death is, well, nearly 800,000 already. That's pretty big, right? So the thing is this, it shows that although the strain is highly transmissible, but the thing is that it's not as severe and people can stay at home to rest. So that's why I say, but of course, Dr. Fauci say, please don't be complacent, it still need to be taken care of, okay? So that's what happened in the US side. And of course, Japan stock set to straight lower this morning because there are many countries are now having holidays like Australia and Hong Kong are closed for the holiday season for Boxing Day. Yep. So with that, you can see this morning, the Nikkei came off using our TWB system. You can see that it came off, color turned from yellow to red. That's why there was some selling earlier this morning. Okay, so these are the local and global news for you to take note. Yeah. Now, some important information for references. Okay, this is where things get a little bit interesting right now. We talk about the US dollar. Now, you must understand this, okay? It looks like Santa Claus is on his way to stock investors for this week, okay? Apparently, all right, this guy, Jeremy Segal, he was actually warning people about this potential no Christmas, but seems like he changed his mind. I think so. And he says that now it could be a good time to even invest in stocks, because even though there'll be an aggressive Federal Reserve, but it seems like he changed his view. Okay, so one of the biggest bull back then is out in November. He was small calling for sell, but then after that, the market didn't really come down much, and now it's going back up again. And I think that he had changed his view. Yeah, as usual. Yeah. So the thing is this: for now, people are very excited. They think that this is a good time to buy, because through the stock trader almanac, this one is a good book. Yeah, the Santa Claus rally period is always the final 5 trading days of the current year and the first 2 the next year. So it's mostly a time where the market gains. Okay, now do note S&P 500 positive 79% of the time since 1928. Wow, that means an average itself, right, it's up by 1.7%. So the currently now S&P is trading about 2,700 level. That means 1% should be another 27 points to 30 points upside. That's a pretty good rally, all right? So because of that, right, momentum historically will carry through. So that's why we're likely to see a further upside on the US market. And according to Bank of America, when S&P has already have solid gains, all right, the past 6 sessions is all positive. Since 1980, there have been 10 instances where S&P was up by 20% or more going into the last year of trading. In the 9 of the years, it ended with the final 6-day higher. So in short itself, right, they expect the next few days to be positive. So everybody around me are very positive. They believe that this Santa Claus rally is already here, and there's no reason to panic. And it's no longer the same like what happened in 2018, whereby the stock market came off all the way until Christmas Day, then it rallied. So the point is this: everybody now is pretty positive. Everybody is very positive that it will be a rally. But the question is this: okay, what is going to inspire the market going up itself other than buying on its own? Well, possible. So that is why Santa Claus rally is about to be here. But interesting at the same time itself, right? Stocks like Up Innovation, iShares, ETFs are not doing that well. And of course, another one is the Federal Reserve is all the one that people are concerned. All right. So let's look at this Up Innovation first. Okay, let's take a look. Yeah. Innovation. Okay, so let's go and take a look. Up first. ARKK. Now you can see that this is Up Innovation stock, and I've been telling you guys that if you really want to buy Up Innovation, you can just consider to buy when it reaches the 61.8 level. But of course, now it is stopping exactly nicely at the 50% mark. Now this is Up Innovation stock right now. So people have been asking me, here, what do you think? All right, so understand that this is the highest of the point. So by logic itself, right, when a counter goes down by 20% from the high, around here, minus 20%, that is where it go into a bear territory. So where 20% somewhere around here, and now the market is way below the 20% mark. So that's why I'm not optimistic on this counter. But undeniable, I did also say that because the market itself, right, I mean, look at the chart, on traditional method, whenever the RSI hits the below 30 mark, every time the Up Innovation do come in to buy. So you can see that, right, every time that this happened, okay, we can see on gradual basis, Up Innovation goes up. So indeed it goes up, yeah, indeed it went up. But you look carefully, right, the upside is not that fantastic. Look at it. The RSI actually bottomed out quite a fair bit, right? But the market itself don't really move up in the same speed. So that's why in this matter itself, right, I still have my reservation. I still think that Up Innovation may go down. So the thing is this, these few days it goes up because of technical point. But if I look at it from another perspective, I believe that Up will have to go down again to about possibly around 88 level for a bit of bottoming out factor, yeah? But of course, the 61.8 itself is 81.25. This is very scary, but is it possible? Anything is possible, yeah. So 61.8 will be the very technical point, because that is the point where by the last time the market also technically stopped there and then shot up all the way. So if things will go back to itself, then $81 could be the level that trader could be looking at to finish up and then probably do some bottom buying for the recovery, okay? So this is what I have for you for Up Innovation. All right, I told you guys I will just in between cross through here and there to show you some stuff, okay? Yeah. Then of course, Bespoke, all right, this of the fund manager says that if January, and say that January could be a positive one for stock, and it's opportunity for it to bounce for those stung by the tax loss selling. So usually before the end of the year, some of the funds will sell some stocks away that will basically be used for tax coverage, all right? Then after that, because of that, they have extra money on the hand, they come back in again in January to buy into stock. So usually January effect is always positive according to Bespoke. And he said that one accountant he's looking at Boeing. So let's look at Boeing shares. Okay, this is Boeing. Okay, so Boeing, obviously, it was once the darling of all blue chips, right? But ever since what happened back in 2020, where it got really hit by the pandemic, it went to a low of this point here, about $90. Okay, so now what we have is a very simple way to do this Fibonacci, very simple. We take the lowest point and to the highest point, and then we do a stretch, okay? So you can see now very clearly that we have a very interesting bounce here right now. Can you see that right now? Okay, you can see that, right? The market actually did this. From A to B, we have the rally. Then we have the pullback, right? Obviously, right? So what you can see is that the market really stays nicely at the 50% mark, and that's for 184. So the last time when this Boeing came at 185, that was where it stabilized. It's trying to go back up again. The next level is 206. That means at 206, which is very nearby, that will be the resistance at 38.2. So I cannot believe that, right? This will be the point of really to look. If the market cannot stay above 206, it will likely pull back down to 184 again. All right. So for Boeing, they're just waiting for all their so-called approval, their licensing, all to be done so they can start to do their stuff. At the moment now, Boeing is on a downtrend channel, but of course, anytime it can break and recover. So my personal view is 206 will be the first technical point to watch out for Boeing. If Boeing can cross above 206, then ideally itself 236 will be the next level, because that is the next Fibonacci level, and that is the 23.6 level. But of course, this is a point where you can see many multiple resistance on Boeing. All right, so one look at it, we take that look 1206 for the first part. If you don't buy it cheap, buy at 284. That will be a good price to buy. Okay, so that's Boeing. Now, of course, this is the point where a lot of the people are speculating right now. The Fed forecasting tool says that, right, the block chart says that there'll be 3 interest rate hike next year. Now, let me give you an idea how this thing works, okay? Now, every time if Federal Reserve is to go and increase 0.25 in point interest rate, right, they will practically withdraw about $1.5 trillion away from the system. Okay, it means that if, let's say now, if they're really going to do this, it's all right, they're going to reduce as much as $1.5 trillion from the system. So the question is this: inflation. Okay, last night we were having a little talk between ourselves on the Go group. We say that, right, if let's say inflation is going to be here, which is like going about 6.3% to as high as 10% by some of the different agencies. Okay, so I'll give you an idea. Now, the current interest rate now is less than 1%. So if Federal Reserve would like to curb inflation, they have to go near or above the current inflation. Then it will curb inflation. So the thing is this, at the moment now is 6%, 6.3% for inflation. How much more do you think that Federal Reserve had to increase their interest rate to make sure that inflation goes down, right? So imagine if the stock market go up to 6%, example, just for example's sake, my God, the stock market will crash. So I don't think it's 6%. How about 3%, halfway? No, I don't think so. The market can take 3%. Because 3% is all right, the interest paid is going to be ridiculous. Because now a lot of people are borrowing money from the Federal Reserve or central bank and almost at near no interest. So that's why they buy stocks, which is obviously giving them more dividend. But the problem is that now, if let's say Federal Reserve say no more, they're not going to give you more money, and we're going to increase interest rate, likely some of the funds will likely take some profit. And because of that itself, right, if you increase my cost, then it makes no sense for me to hold stocks. Hence, therefore, I would rather give back the money. And when I give back the money, obviously, I have to sell some stocks away, right? And wouldn't that help to reduce the current inflation, which is now basically the stock market is going up due to this so-called easy money policy. So my view is this: I don't think they will even hike 3 times, because I don't think they have the capacity to do it 3 times. And the resources at the moment now is definitely not enough. So that's why my personal view is that I don't think so. We will have 1 rate hike. Yes, we have, and that's about it, in my opinion. Yeah. So in short, it's all right. The next data point for the month will be is January, whereby we look at December data, and of course, we expect the market to be weak this week. Yeah. So this is what is showing right now. And the thing is this, the volume the last week usually is typically 20 to 30% lower than normal. So we do expect to go slow. That's why this week itself, we're not really asking you to buy a lot. In fact, just go slow. And of course, now with the FDA approving the Pfizer pill, so likely that will help the market a little bit. But nonetheless, it's out in short. Basically, most of the article I read earlier, all of them are very bullish for this coming week. Yeah, okay, so you got an idea now. That is what to summarize what we have in the market. Okay, so now let's look at the dot plot. Okay, this is where it gets very, very interesting. Now, what is a dot plot? Dot plot is basically when the Federal Reserve, all the members are asked, what do you think about when should we hike interest rate and stuff? So they raise their hand and then they get the so-called votes. So very, very interestingly, we have an interesting number on the chart. So let me just bring it to you right now. Give me a moment. Yeah, okay, just a moment. Okay, so the Federal new dot plot after its December rate meeting, yeah, let's take a look. This is the new dot plot. Now take a look. The new dot plot shows that this is what they are looking at for 2021. Definitely no interest rate hike. But interestingly, by 2022, majority of them are looking at, oh my God, they are looking at about one, two, three. Majority of them are looking at 3 interest rate hike of 0.25. That's what you can see now is 0.25, right? So majority of them are looking at this point here. Can you see now? Okay, hold on, yeah. Majority are looking at here. Can you see on the screen right now? Yeah, they're looking at somewhere around here. So if that's the case itself, right, they are looking at 3 interest rate hike for next year, 2022. Then the level they're looking at is by 1.75. So, and the thing is this, by 2023, my God, they're looking at even much higher, 2% overall. Now, I cannot see that happening. I think that 0.75 to 1.0, I think that will be the stop. Yeah, I believe that, because I believe that by the time this happened, the stock market will not be able to take it, and most likely we should see some real selling in the market. So undeniable, that's my view and how I see this chart right now. Yeah. So what do you think, guys? What do you think? Do you think that the US interest rate itself will go beyond 2%, or you think that you'll stay below 1%? So let me have your view right now, and let me see. That's 57 of you today. That's a pretty good number. So let me know. All right. Okay, so what do you think, guys? Waiting for your answer. What do you think? Will there be more than 2% by next of 2023, or you think that it stay below 1%? What do you think? Well, we are having a bit of transmission issue here. What do you think, guys? Waiting for your answers. Okay, so my personal view is that it will stay below maximum 1% in my personal view. So because why? In 2018, when they had the tapering and then they began the rate hike 3 times, and that's where they went by 1%, right? Remember? Immediately, the stock market went down by 24%. All right, that was a very big sell-off. Let me just bring to you right now if you can't remember that, okay? I'll bring to you right now. Okay, I'll bring to you what happened back then. Okay, let me bring to you, for those who don't remember, let me just bring to you, okay? Now, this is what happened in 2018, okay? In 2018, that was the first sign of tapering. Okay, that was what happened back then. Then after that, the market was taken aback first. Okay, taken aback in January. Then after that, it saw, right, the market stabilized for quite a while. Then of course, in the July period where the earnings came out pretty good, the market goes up, right? But then Federal Reserve kept increasing rate hike. Okay, they rate hike 3 times. So by the 3rd time, when the market got it itself, right, that's it. The market couldn't take it anymore, and the market sell off. Wow, that was a very big one. The market at the time itself was at 26,000, and the time it went down was 22,000, and even lower than that, 21,000 plus. So in short itself, right, the market came down almost 5,000 points, which is about 20%. So you got my point now? So the thing is this, at the moment, straight away, Wall Street couldn't take it anymore, and quickly, they reverse it, and they basically cut interest rate again, and the stock market went all-time high. So you got an idea now? Yes, okay. So the Federal Reserve do actually control the market pretty well. So the question is this, will we have the same thing? Now, my personal view is that I believe that we will have the same thing. So what I'm trying to say is, I believe that the stock market itself, right, will likely be coming off a little bit during the next 6 months. I believe the next 6 months, yeah? Now I'm gonna write it down. I know that my repetition probably on stick right now, but I'm gonna stick to it. I believe that within the 6 months, I can draw for you, okay, that this is what I view in the next 6 months. Now, of course, the market may go up a little bit in between, but I believe that the next 6 months itself, right, the market most likely will pull back. Okay, the pullback itself, right, in terms of significant, my personal view is that it won't be a lot. Probably it's about 20+%. So that means that if let's say we take the highest point right now, okay, at about, yeah, let me just, okay, about, let's say now it's at 36,500, yeah. So if the market goes down by 20%, okay, by 20%, let's say, I'll give you just a number, okay, so that, how much would that be then? Then that will give you a rough estimate about 36,500 times 0.8, you get about 29,200. Yeah, okay. So this is what I view in the market, 29,200 level. Okay, so if that is the case, then we will put a line there just for the sake of, just put a caption there. There we go. Right, somewhere there is all right. Amazing. 29,200 is exactly the neckline previously. So take a look, guys. Everybody, take a look. Now, I did not prepare this before coming on board. I just got this feeling coming in right now. As you know, I first had this feeling. You can see that that was the previous high, 29,200 level. And of course, that time the market did came up to 29,200 and stopped there brilliantly. And then after that, there was a big gap in between. There's a big gap up. A big gap up, and then what happened? The market shot up all the way. So that means that as a trader, it does seem that there's a high chance that could be a pullback to 29,200 first. And by the time this actually happened, I believe the stock market itself will change around, which means that, I mean, likely Federal Reserve will say, okay, we have achieved what we wanted. I think it's good enough. Let's now go back up again. And then what happened? The stock market goes for the all-time high again. You understand my point? This is what I view in the next 6 months. Okay, so again, I can be wrong. The market could surge higher, who knows, but I believe that my technical aspect could be correct as long as we see what we need to see in the financial market, which is coming right now with regards of this. Okay, all right, so let me see how many of you agree with this chart of mine. How many of you disagree? Just for the fun of it, it's okay. Doesn't mean that you disagree with me, I'm going to kick you out. No, no, no. I just want you to take a look right now. How many of you agree and how many of you disagree with me? I just want to see what's your view today. All right, just a little sharing session. Come on, let's do it. Yeah. Okay, I'll take some picture for myself. Today I'm working from home. Yeah, I'm going to bring my grandmom to see the doctor because she's having a bit of a dental problem. Yeah, indeed. But pretty cool to see me on the big screen today. It was actually using my TV screen to Comcast. Pretty cool. All right, what do you think? Guys, what do you think the next 6 months itself? Do you agree with my chart or you disagree? It's okay. As in, no one is right, no one is wrong. No one can forecast the market. Everybody is just putting a probability into the system. Yeah, just give a try. What do you think? Okay, so we are having some, oh, okay, wow. In fact, all of you agree with me. Oh my goodness. Okay, that's pretty interesting. So that means that if everybody agree with me, that means that I'll be wrong. Okay. All right. Just for the fun of it. Okay. I don't know. Okay. But then again, I like to sound it telling you itself. Yeah. Leroy. Yes, indeed. Sound logical. Fed dot plot could be a signaling too. So let me now ask you a question. If let's say Federal Reserve is going to follow the dot plot, let's say not entirely, but definitely tapering is confirmed. And then the first interest rate, okay? So naturally, we all know that that will reduce the dollar in the system, right? This one we all know. This one is something factual. We cannot run away. It's no brainer. So the question is this, if that's the case, the next question is what will happen to the dollar? Now, let's take a look here, everybody. All right, so Federal Reserve says that the so-called dot plot, right? So-called, okay, shows that the official expecting a raise of the Fed funds rate by 3 times next year and 3 more times in 2023 as a medium projection. Okay, you should know that you cannot project this for fun of it. There must be a reason for that. So now let's take a look at the dollar right now. Now, if you remember, for those who are with me online for some time, you remember when the dollar was coming off back in 2020 during this period, whereby about this April, then it went all the way down to this point here, and that low was 2021. Now, what happened during this period of time? Remember, the reason was because Federal Reserve came in to pump in a lot of dollar into the system, because they put in every month $120 billion into the system. That's the first thing. Number two is they basically cut interest rate, obviously, and obviously it's with all the money coming in, the dollar depreciated in value. So this one we understand is really sensible stuff. So you cannot lie about it. But the question is this: you can't let the dollar go down go down all the way down, right? So what happened in 2021? Something changed. And that was where I called for buying on the dollar. I said that, guys, look, buy the dollar yen, buy the US dollar, right? Sell the euro, sell the pound. That was what I said in the early of this year itself. So now you take a look, everybody, take a look. Ever since every time when the market goes up, right, you can see the technical shows the RSI goes higher. Okay, so fine. Usually the first wave itself, the market will be pinpoint accurate. So the market did come down. But from this point, you notice already the low actually got higher. Can you see that? First clue. So what happened is that when the market goes up to the RSI common point again, you notice that this time round itself, right, the market actually went higher. And every time it pulls back now, the low of each cycle gets higher and higher. So this shows that, right, there are people, the smarter people, much smarter than us, they are buying the dollar despite everybody said the dollar will crash. Now go back to 2021, early January, February, March. Everybody, all the YouTubers, Instagrammers, expert gurus were all calling the dollar to crash, not me. I call for dollar to go up. I believe the dollar will go up. That's the reason why I draw this chart from the very beginning. So the thing is this, I said before, once the market crosses the 38.2, that is about 94, it will be a strong buy all the way to 96. All right, now for those of my friends right now today, 61 of you right now, how many of you remember that I did tell you to buy the US dollar? If you remember that I did call you to buy the US dollar, key REM right now. Now we're doing a live show right now. I cannot lie about it. I can't control whatever you write. So if you think that I did bullshit, then I'm so sorry, but I don't think so. Let's take a look right now. I believe that it will go up the time, right? I did say that the dollar go higher. Please make a mark right now. Now I'm actually broadcasting to my own personal Facebook. I put it in my Facebook page itself, and of course to Cambodia. So which means that, right, everybody is able to see this. And of course, hopefully in another 3 more months, we can review this again and see whether, were we right or wrong. All right, so guys, thank you, Anthony. You remember that? Good. Susan, you also remember? How about the rest? That's 59 of you guys. Now, the thing is this, okay? Now, what do I see right now? I'm going to tell you this, my personal view. Okay, my personal view. Oh, Kelza say that. You remember that I say you'll go up. Huh? Thank you, Kelza. Thank you so much for remembering that. All right, thank you. Okay, so the thing is this. Okay, why do I say that point? It's because, in my personal opinion, okay, hold on a minute. There's something wrong with my transmission again. Hold on, yeah. Okay. All right. So what happened is that what I'm going to see is I believe that this US dollar will be trading higher. Okay, it will be trading higher. And I believe that this time round it's going to go and challenge this next number. And that's about 97.73. 97.73. And that is the ultimate level, the 61.8. Now, 61.8 in Fibonacci is a very powerful number. So I believe that this is going to make the market. This is going to make the market. So I strongly believe the US dollar is going to go up. Now, the question will be this. Okay, if the US dollar goes up at the same time, what will happen to gold? Will gold be pulled back? Well, I believe the answer is yes. I repeat myself once again. I believe that if the US dollar is to strengthen to 97.73, there is a chance for gold price to come off. So that's why I am not that heavily a big supporter of gold right now. I can buy it for intraday movement. I believe that gold will go up a bit more by next 1-2 weeks, a bit more. But once the US dollar really accelerates its movement towards 97.73, then gold will pull back. Yes, gold will pull back, not a lot, just at the pullback itself. So everybody kindly take note of this, okay? So once if the market really holds above 97.73, then that's it. The big movement that we are looking at itself will be much, much higher, okay? It will be much higher. So let's stick with now is this current level itself, yeah? Okay, about 97.73. So my view on gold, on US dollar right now, okay? Now with that itself, right, let's look at the US dollar options market to get some idea what's going on right now. Now you can see that, right, okay, the US dollar options, all right, shows that a lot of people are very optimistic on the US dollar. Now, back then when the dollar was coming down, there were a lot of people taking the call, the put position, okay? But what happened? Usually when the fear in the market bottom out, and that's why the market recovered. So it's been proven again. So some people ask, Cal, since the market now is a higher level, does it mean that we will see the dollar coming down? Well, I would say no, because why? Take a look again. This is where the market break out from the bottom, yeah? And then when it go up itself, right, the dollar was pushed up quite significantly. So I believe that this will likely happen. That means that there will be a bit more upside. That means that, in my opinion, there will be, let's clear the screen a little bit. I believe that the dollar will go up a bit more, something to hit the same point here, and that will pump the dollar higher. You understand? If we pump the dollar higher itself, right, then that will become the move that I believe the next 3 months will happen. And when that all happen itself, right, then this is where the equity market will be a concerning factor. Let's take a look, everybody. Now let's take a look right here. This is actually from a YouTuber, okay, a YouTuber that I basically follow. So I'm not going to take his artwork from him, but I'm just going to inform you how it works. Okay, first of all, now the one that is moving in the candlestick is the US dollar index. Okay, so the one in orange is the S&P 500. Okay, so now I give you 30 seconds, everybody, to take a look. Do you think that this chart itself is correlated or inversely related? This chart itself, in your opinion, is it closely related or is it inversely related? Let's take a look now. 30 seconds for you. Tell me, what do you think the answer should be? All right. Let me see what's your view here. It's everybody at 63 of you right now online. So let me see what is your view on this, yeah? Okay, so Kelza say it's inverse. Okay, this Peter Leong says it's inverse. Kim Lai say it's correlated. Dennis is inverse. Andrew inverse. Leroy is also inverse. But you look at the chart, don't you find that it moved together? Don't you find it moved together? It's like you see the US dollar is going up, right? The stock market also goes up. Then of course when the dollar goes down, the stock market also go down. Is it correct? Now, if you look at it from this point itself, right, you may not think it's like that, but you have to go and break down into pieces. Then it'll be more accurate. Yeah, now no chart relationship itself is going to be inversely related or correlated directly. Okay, sometimes it will be correct. About 60-70%, if I say they are meant to be inversely related, it works about 70% to 80%. But there will be 20% that it will work together. So this is why you must understand. So this chart itself, from one view, I will say that they are considered as in my opinion, related. But if you look carefully now, like I said, this is not done by me, it's done by a YouTuber. Look carefully right now. This is where it's hard to separate the difference. Yeah, take a look, everybody. Now you can see that when the US dollar was coming down, as you can see from this first green shaded area, the stock market went up. Okay, got an idea now? Okay, all right. Then after that, when the index market goes down again, the stock market goes up. Okay, so this is from year 2003 until today. Yeah. So again, you can see every time when the US dollar starts to go down, right, the stock market actually goes up. Okay, got an idea now? Yeah. So it seems to be that way, but only recently, the US dollar index, so S&P is going up, the US dollar index is going up at the same time. Only recently, you're right, Dennis, only recently you're moving in tandem. So the question is this, okay, what do you think? Now, I believe that, right, this buying of the US dollar is because they know that eventually there will be hiking of the interest rate. So the boys are buying in anticipation. But because of that itself, right, the money is still abundant in the system, that pushes the stock market higher, and a stronger dollar become a strong reason to buy the bonds. And because the bonds market is doing well, that's why the US stock market is going up, because everybody still have confidence for the US equity market. So you got an idea now? But since 2003 onwards, the last how many times, you can see that they work in an inverse relationship, inverse, okay? So now the point is this. If let's say now, but what we are seeing on a chart, if this dollar index continue to go up, what happened now? Take a look, guys. The last time we saw something like this when the dollar index go up, right, in a very parabolic way. The stock market toppish and then came down, and that was in 2016 level. So it happened again when the dollar index was going up around this period, right? What happened? The stock market pulled back. So it seems to be every time the US dollar goes up strongly, the stock market pulls back. So now we have a very clear cut. There's 70% to 80% chance that if the US dollar goes up, the stock market comes off, okay? Now, this is not 100%, and fundamentally, it doesn't carry much weight. But in reality, for the last, 18 years, it seems to be like that, all right? So that's the reason why I got my rising concern. Now, earlier, you guys have seen the dot plot already, right? So it's no-brainer to tell myself that I should be very careful with the stock market the next 6 months, all right? So let's take a look at this, right? This is the one that I showed to you. Whenever the US dollar index goes up, right, we do see the stock market collectively going down lower. But of course, recently, it's not moving in the same way. And I believe that it's because the clock is just ticking, and it's just a matter of time, things will get very, very ugly, all right? Now, what I do is this, I put in this thing called the Federal Reserve surplus and deficit, or deficit, sorry. Now, this is not shown much in many social media. You don't see much, in fact, by gurus or experts, because this is really very in-depth stuff. So once again, this shows that the FYFSD, all right? So what you can see very clear is that when the federal surplus is moving upwards, okay, the US dollar index move up. Can you see that right now? So this is US dollar versus the federal surplus or deficit, okay? So now it's very clear that whenever this thing is moving up, the US index is going up, right? Obviously, right? So if this is going down, the dollar index goes off. So this one is back since 1992. Okay, got an idea now? Okay, now watch this, guys. From the bottom itself, we can see very clearly that we have the FYSDSD, or the federal surplus or deficit, is recovering from the bottom. And based on what we are seeing right now, we are able to potentially see an incredible run on US dollar. Now, I don't think we will hit this point. I don't think so. I think that somewhere around here will be pretty good already. So with that itself, right, that means that if the US dollar is to go up, right, that means that the chance of the stock market coming down is getting higher. And of course, if stock market coming down, right, what will be the impact? Well, definitely Nasdaq counter will be the one getting the full impact of this. That's why I still believe that up innovation will get hit pretty badly. Yeah. So that's the reason why I want you to take a look at this chart and make your own decision. And I'm not here to tell you that what you should do, but you can consider what you can look out for in the market itself, right? Oops, okay. So with that itself, I have covered the fundamental part. I hope you like it. This is a good sharing. Let's go into the charts for today. Now, do expect the chart to be very, very slow today, because we have a very light, usually we have a very light time during this Boxing Day. And of course, some of the counters like Hong Kong and Australia, they are not open. That's why. Okay, now let's look at China. Now, China's stock market amazingly is able to hold up this week, today, because we have the lockdown in Xi'an, and it seems to be not getting any better. Now, we can see in the chart form itself, right, we have a very tightening momentum now, where the two moving averages is coming in together, the MA30 and MA50, 200, sorry. All right, thank you, Louis, for that. Thank you very much. Again, it's a lot of commitment on my side. Thank you guys for supporting it. So what we can see is clear that the market is trying to get itself supported above the MA30 while being resisted at MA200. So anytime the market make a decision, this will show a big movement coming in. So that means that, right, big movement is about to come for the China stock market. Okay. Now, people have been asking, what is my personal view on the Chinese stock market? Well, this is my take over longer scale. You can see that overall itself, the bottom have been done at 14,800 level. It's been done. So this is what's happening now in China. All right, and we're going to approach the Chinese New Year soon, about 1 month time. So usually during the Chinese New Year period, right, let's take a look. Usually the stock market itself will do pretty well. Can you see that? That's what's happening in 2021, early this year. And of course, let's go back a tip a little bit, backward a little bit more. You can see that in 2020, January, you can see also again, it's a traditional thing that the market will usually go up during the Chinese New Year period. So that's why we did see in January, the market came off, then it bottomed out, then it rallied. So I believe that this could actually be happening the same. Okay, so my view is most probably we're going to see a little bit of selling, then recovery like that. Okay, that's my view for the stock market for China. Okay, all right, so Hong Kong is closed, so I'll skip that. Let's go straight in now to the US market for today. Now let's bring the chart in. Now, like I said, today is a light trading day, but still it's going to be trading, so we need to cover a bit of here and there. Let's take a look now, charts form. Now, very clear today, the MLP is 35,873, and the KSI is green in color and it's uptick, so it's more towards the buy side. So I believe that if the stock market goes up, right, it should be able to test the KCB level at about 36,145 area, around there. Cannot really see the numbers there, yeah? So around there, I'll give you a ballpark figure. So somewhere around there. So that is the first target, I believe. Now, unless the market breaks MLP, now only if it breaks MLP, then we may see pulling back to 35,601. But I don't think so that will happen today. So let's stick to the buy side as long as the market stays above OP. At the moment now, it's below OP, so we wait for a while, yeah? Okay, how about the Nasdaq? Now, the Nasdaq is the one that I'm pretty not very convinced with the recent recovery. And again, the fundamental does give a problem because a stronger dollar will bring the Nasdaq counter down. You must remember this. The stronger dollar will not help the Nasdaq, okay? It will not help, yeah? So now the thing is this, we did see the boys coming in strongly. That's why you see one day beforehand, this guy belongs to this guy here, right? So that means that the day before, we already know the boys came in. So my students itself, right, went in to buy Nasdaq somewhere around here. And of course, after that, the Nasdaq went all the way up. So with this happening right now, very good chance that Nasdaq should be able to go 16,428 today. There is a chance for that happening unless this is the turning point for this week. So I don't think so. So we'll wait for a while. Right, 16,428 should be a good number to expect for some form of TP and resistance, yeah, for this figure. Now that is the Nasdaq. S&P 500 now, you can see the same thing happening. Now S&P is much stronger. You can see S&P did not come down the low recently and then start to go higher, right? Now S&P, again, everybody's watching now this price at 47.35. That is the level, which is about cash market 4,700, okay? So which means that now everybody wants the S&P to go past 4,700. Let me bring you the cash market. That what is everybody looking at? Oh, yeah. Okay, so the S&P 500 have now crossed the 4,700 level, but it's still not strong enough to be convincing. Let me just bring to you. Let's clear some of the lines. Oh, yeah. Okay, let's bring it up. Bring it through. Can you see that? Okay, so the market is all of them are looking at S&P to stay be reset 4,700. Now the thing is that it has broken it, and now we are trading a bit higher right now. The question is, are we going to be hitting the all-time high? Now by right itself, right, it's just a matter of days. It's most likely it will be triggered. But what was amazing was that when I was seeing the chart right here, remember when I was showing the chart when S&P was trading here, I told you S&P will either stop here or will stop here. And truth be told, beautifully, it stopped perfectly at the line that I draw. So now the thing is this. If this is going to be number 1, then this is number 2, and naturally this is number 3. So will there be a triple top, or is there going to be a blast up itself, right? So it's going to blast up. How high will it go? Well, logically, 4,800 will be the target that the S&P should be heading for this year. 4,800. So it's about 75 points from where we are today. Now, of course, if it doesn't into a triple top, then the first point of support will be here, and then another drop will be somewhere around here. Okay, so that's how I see for the S&P 500 in the term of technical. Yeah. Okay, so we have that done for S&P 500. Let's look at the Nikkei. Now the Nikkei is coming off this morning. Nikkei, although the boys are buying, but it seems that there's some profit taking this morning. Now why? Most likely it's because of the dollar index. The dollar yen. Let's take a look. See, the dollar yen is going up. Now the dollar yen is going up itself should be actually to push the Nikkei higher, but instead the Nikkei is actually lower. So something is very wrong today. It's more of profit taking, and that is the concerning factor right now. So Nikkei today seemingly is not able to trade higher where it's supposed to be, and now it's really, basically stunned by all the numbers over here. That's about the MA 200 and MLP. So my view is that it should be able to come down to this point here, and that's 28,593. I think once it goes there, there should be some artificial support because the boys are still on the long side here. Okay. All right, so that had Nikkei, and of course DAX itself, right? We have DAX coming in today from the holiday. So DAX should be able to test on the higher ground somewhere around this area, and that's about 15,800 level. Yeah, 15,800 should be the point that the DAX could be trying later today. All right, so the last one, now we look at the commodity market, which is gold example. Now this morning, I already informed my student to buy gold. Why? Because you can see that gold actually touched my MLP at 1806.41. It touches it and rebounded. Yeah, let me just show to you with the chart. Okay, you can see that this morning the gold price came down, hit my MLP 1806.41, stopped there, and then recover, ding dong, and then one push. Now this one push itself is definitely not by coincidence. It's definitely done by some algorithm. So usually when I see this, we know that likely there will be another wave later on. So what we do is very simple. Okay, let's take a look at the calculation. So this is one big move, right? Okay, this whole big is one whole big movement is about, let's say 1806 to 1810. So it's about $4 movement. $4, yeah, $4. Then the halfway mark is here. So as long as the market doesn't go below this halfway mark, it's safe. So which means that the next move is out, will be another $4. So this high is at 1810. So the next target should be 1814 to 1815 roughly. So if the goal is to go up, right, you can see KTR plus 1 is 1814 and pivot 1, 1815. So I believe that gold later on this afternoon, gold will go up towards 1814 to 1815. Okay, so traders, you can consider to look at the gold market later today. Yep. Now, of course, again, I say, of course, the dollar view is 6 months view, right? Not an immediate view. So if the dollar pull back recently, because it went up already, right, and pull back, that will push the gold a bit higher. But once the dollar finds some strength to recover, right, then that's where gold may get a bit of some selling. Yeah. Okay, so that's gold. And how about silver? Now, a friend of mine asked me this question about my view on silver, and I said that, look here, guys, buy some silver. Now, buy some doesn't mean you buy into all immediately, because I said, if I say gold to pull back, right, silver will come down. But you can see that every time silver hit around $21.80, it was always a good time to buy some silver. So now silver is $22.80. Is it good time to chase? Well, you want to do a short-term burst of buyer, short-term trade, yes, you can do, because my target is still 23. My target is still $23.39. Okay, I still believe that silver will go to $23.39. Okay, but once you reach there itself, right, there should be some form of profit taking already. So with that, my view is buy silver, okay, 23.39, please take some profit. Okay, all right, so that is silver. And of course, look at crude oil prices. Crude oil. Now, crude oil has already done its part. It has bottomed out recently beautifully at 67.40 cents, and now it's going back up again. So now the thing is this: where's my target for crude oil? Is $76.10. Now, of course, the thing is this: the problem is that it's lack of manpower and stuff like that, and all these are weighing onto crude oil. So that's why the more manpower problem, more supply chain issue, more weather problem, the crude oil price will go higher. And if crude oil price goes higher, inflation goes higher, that means that the chance of hiking interest rate is a must, because they cannot reduce further on they cannot pump in more crude, they cannot reduce the crude oil prices. So definitely itself, right, this will become the next big movement. Some of the crude counters will benefit, but majority will be hit by inflation. Yeah. So that's why I believe that for crude oil will be the main thing to look out for. And my personal view, is that crude oil can really go much higher, because I give you a simple Fibonacci over here as well. We take the highest point and lowest point and I bring it in. Okay, can you see that right now? Crude oil has really bottomed out from 23.6, 38.2, and now it's actually now at the 50% mark. This is a crude oil at 73%. So that means that once the crude oil now breaks above the 50% mark, the next target it will go will be $76. And that is the 61.8 level. And I believe that this will be moving towards there. Yeah, it's a good chance. So traders, do take note, crude oil, $76.28 seems to be a very good level. And of course, now we are at a crossroad whereby it's a 50% mark. All right, so that is the most of that. Last two will be the Bitcoin and cryptocurrency, Bitcoin and Ethereum. Now, Bitcoin is still basically hovering around this area, below the P2, below the MA, and basically struggling in MLP. Now, of course, some people say that, right, this is the calm before storm, whereby the Bitcoin will go higher, and many of them are looking at 56,000. Now, I beg to differ. I think that, right, look at the selling in the market, and there's no blue bar, and yet the counter cannot go higher. It's just a matter of time for Bitcoin to come down to 44,000. So, of course, again, I can be wrong on this. Let's see what happens. Yeah, okay, let's take a look. And last but not least, will be Ethereum. Ethereum is also sideways, and everything is still the same like what you saw in Bitcoin. Everything is low, and of course now it's consolidating. So it can go up itself. The target will be 42.50 because that is the BNB 1x1. But the downside itself, right, could be around 40.060, which is somewhere nearby, and that will be the resting period for the Ethereum. Yeah. Okay, so that is my view for today. Remember, it's a light session today. It will be light for this week. Traders go slow, no need to hurry. In my opinion, gold is a relatively good trade. Dollar index, whenever it comes down, can be a buy. And of course, if let's say whatever I say, it does really happen, then I believe that most likely we'll see a little bit of recovery to now to January. But by February or March, be very careful. The stock market may really take a breather. And of course, when it takes a breather, market panic, one sell with the other, then of course selling may become drastic. But once it comes drastic, it'll be a good time to buy into the market once again. All right, thank you once again for today's MAO. Today we've done it perfectly within an hour. Thank you very much. Have a great day. This is Cal signing off. Bye-bye.